The year 2026 is shaping up to be one of the most transformative periods in modern U.S. economic history, and it all revolves around one unstoppable force, the green technology boom. If you think back to the early 2000s, people who recognized the potential of the internet, those who invested in Amazon, Google, or even Apple at the right time, were able to ride a wave of innovation that didn't just change their portfolios, it changed their lives. Today, we are standing at the exact same kind of crossroads, except this time the driver is not digital disruption, it's environmental and sustainable innovation. Green technology, or green tech, as it's widely called, is no longer a futuristic idea or a side project for eco enthusiasts. It's the next industrial revolution. But the big question is, will you spot the opportunity and act on it, or will you watch it pass by? Let's break this down simply. When we say green tech, we're talking about the industries and technologies designed to solve our biggest environmental challenges. Renewable energy, electric vehicles, sustainable agriculture, water purification, carbon capture, battery recycling, and even eco-friendly construction. For years, these sectors were treated as good for the planet but not profitable enough. That's not the case anymore. In fact, thanks to a powerful push from both the US government and private industry, green tech is now one of the fastest growing and best funded areas in the entire global economy. Just think about the Inflation Reduction Act of 2022, which committed more than $370 billion to clean energy and climate initiatives. By 2026, that massive injection of capital will have fully kicked in, driving innovation, subsidies, and private investment at levels we haven't seen in decades. This is the moment when policy, business, and consumer demand all align. And whenever that happens, wealth is created on a massive scale. If you want a picture of what's coming, look at the success stories already unfolding in the US. Take Tesla, for instance. A decade ago, many laughed at the idea of a startup competing with auto giants like Ford and GM. Today, Tesla isn't just a car company, it's a clean energy leader worth hundreds of billions, and early investors who believed in the vision turned modest sums into fortunes. Or consider NextEra Energy, a company that quietly became America's largest renewable energy provider. Their growth didn't happen overnight, but consistent investment in wind and solar made them a powerhouse, and now they're often mentioned alongside the likes of Exxon and Chevron, but with a future-proof advantage. These examples aren't outliers, they're signals. They tell us that the US market rewards companies that can both make money and solve environmental challenges. And they show us that the coming wave is not speculation, it's confirmation. Here's where it gets even more interesting. The green tech boom isn't limited to just the headline names you see on Wall Street. Beneath the surface, there's an entire ecosystem of smaller, agile startups and mid-sized companies poised to capture enormous market share as the industry matures. Think about Redwood Materials, a Nevada-based startup focused on recycling batteries. They're not making EVs themselves, but they're solving one of the biggest bottlenecks in the EV revolution. What happens when millions of batteries need replacement or recycling? That kind of supporting industry could quietly generate billions, and investors who spot them early could see outsized returns. Similarly, vertical farming startups are popping up in cities like New York and Chicago, using less water, less land, and producing food year-round. While they may not grab the flashy headlines of Tesla, they're solving real-world problems with scalable business models. The bottom line is simple: by 2026, we'll witness a tipping point where green technologies are no longer optional. They'll be mainstream. Electric vehicles will make up a far larger percentage of US car sales. Solar and wind energy will power millions more homes. Carbon markets will be a real way for corporations to offset emissions, and consumers will actively choose sustainable products because they're affordable, reliable, and widely available. Investors who understand this shift, who don't wait until the boom has already peaked, have the chance to get in on the ground floor of a multi-trillion-dollar transformation. Just as the internet created an entirely new class of millionaires and billionaires, the green tech boom is positioned to do the same. The key difference is that this time it's about both profit and purpose. You building generational wealth while helping secure the future of the planet. Across the United States, the signs of the coming green technology boom are everywhere, and they're no longer subtle. What was once considered a niche or experimental industry is now one of the fastest scaling economic forces in America. Let's start with electric vehicles, AEVs, perhaps the most visible face of the green revolution. Companies like Tesla have already proven the potential of EVs, but they're no longer alone. US-based Rivian is building all-electric trucks and SUVs that appeal to mainstream American families, while Lucid Motors is targeting the luxury segment with vehicles boasting industry-leading range. Meanwhile, legacy automakers like Ford and General Motors have committed tens of billions to electrify their fleets by 2030, signaling that EVs are not just the future, they are becoming the present. By 2026, analysts predict EVs could account for more than a quarter of all new US car sales, up from just a single-digit share a few years ago. For investors, this isn't just about car companies, it's about an entire ecosystem of suppliers, battery manufacturers, charging infrastructure firms, and recycling startups that make the EV transition possible. One of the most exciting opportunities lies in battery technology and recycling, a sector many casual investors overlook. The EV revolution depends on lithium-ion batteries, but with millions of EVs expected to hit the roads, the demand for lithium, nickel, and cobalt is skyrocketing. That's where companies like Redwood Materials come in. Founded by a former Tesla executive, Redwood focuses on recycling old batteries to recover valuable metals. This approach doesn't just solve a supply chain problem, it also addresses an environmental issue, making the solution profitable and sustainable. Imagine the potential. Every EV battery that gets replaced in the coming years represents raw material that can be reused, and companies leading this charge could quietly generate billions. This hidden sector has the same wealth building potential as the early days of oil refineries when the automobile first took off in the 20th century. Next, let's talk about renewable energy, another cornerstone of the green tech boom. In states like Texas, wind power has already become a major player in the energy grid, while Arizona and Nevada are investing heavily in solar farms that can power hundreds of thousands of homes. The shift isn't happening because of charity. It's happening because renewable energy has become cost competitive, often cheaper than fossil fuels in many regions. Add government tax incentives and corporate demand for clean power, and the growth trajectory becomes unstoppable. One standout example is NextEra Energy, now the largest renewable energy provider in the US, and a favorite among institutional investors. Their strategy has been simple but powerful: scale renewable projects consistently and profitably. By 2026, dozens of similar companies, both large and small, will follow this path, and investors positioned in renewable infrastructure could enjoy steady long-term returns. But renewable energy isn't just about large solar farms or wind turbines. The industry is also scaling in decentralized ways. Across suburban neighborhoods, rooftop solar installations are becoming more common, and thanks to financing programs, more homeowners can afford them. This creates opportunities for companies that install, maintain, and manage these systems. On top of that, storage solutions like home batteries, think Tesla's Powerwall or new competitors emerging in the market, make solar power more practical and appealing. When millions of American households transition to prosumers, producing and storing their own energy, the companies serving this demand will see explosive growth. Another rapidly growing segment is green construction and smart cities. By 2026, infrastructure projects in the U.S. will increasingly incorporate sustainable materials, energy-efficient designs, and advanced technologies that reduce emissions. This isn't limited to fancy eco buildings in Silicon Valley, from office towers in New York to residential projects in the Midwest. The demand for green, certified buildings is accelerating. Investors can look at companies producing innovative building materials such as carbon-neutral cement or recycled steel, or firms that specialize in smart energy management systems. The concept of smart cities, urban areas designed to optimize traffic, reduce energy waste, and improve sustainability, is no longer theoretical. Pilot programs are already running in places like Columbus, Ohio, and Austin, Texas, and by 2026 we'll see wider adoption nationwide. Perhaps one of the most underestimated sectors in the green boom is carbon markets and emissions reduction technology. Tech giants like Microsoft and Amazon are already investing heavily in carbon credits to offset their emissions. This has created an emerging multi-billion-dollar market for companies that can remove or reduce carbon from the atmosphere. Startups in Wyoming and Texas are building direct air capture plants that literally pull coal from the air and store it underground or reuse it in industrial processes. While these technologies are still in their early stages, they represent the cutting edge of what's possible. For investors, this could be like buying into cloud computing before it went mainstream. The best part of these opportunities is that they aren't reserved for institutional investors or billionaires. Everyday investors in the U.S. can tap into the green boom through publicly traded companies, ETFs, and even green bonds that fund sustainable infrastructure. For instance, ETFs like ICL and iShares Global Clean Energy TAMS Invesco Solar and LIT's Global X Lithium and Battery Tech provide diversified exposure to different aspects of green technology. This makes it easier for retail investors to participate without having to pick individual winners and losers. At the same time, those with higher risk tolerance can look into how startups or crowd-funded green projects that have the potential for exponential returns. As we reach the final part of this guide, let's pause and look at the bigger picture. The coming green tech boom isn't just another investment trend, it's a complete reshaping of the American economy. By 2026, we are going to witness a turning point that will echo for decades, just like the Industrial Revolution did in the 1800s and the digital revolution did in the 2000s. What's unique this time is that the drivers of wealth creation are not only technological innovation and consumer demand, but also urgent necessity and government support. Climate change, resource scarcity, and shifting consumer expectations are pushing businesses and policymakers to make green tech the new standard, not the exception. That means this isn't just a short-lived wave, it's the foundation for the next era of growth. For investors, that creates one of the clearest opportunities of our lifetime. Think of it this way: when the internet first became mainstream, it was hard to imagine just how far it would reach. Back in the 1990s, who could have predicted that companies like Amazon would evolve from an online bookstore into one of the largest businesses in the world? The same thing is happening now with green tech. Some companies that seem small or niche today will, by 2026 and beyond, become household names. Whether it's in electric mobility, battery recycling, smart cities, vertical farming, or water technology, the seeds being planted now are the giants of tomorrow. The investors who have the foresight to act early, before the headlines and the mainstream frenzy, are the ones who will reap the biggest rewards. Another critical factor to consider is how broad this opportunity is. Unlike many past booms, which focused heavily on a single sector like software or social media. The green tech boom spans across nearly every part of the economy: transportation, housing, agriculture, finance, energy, data, and even manufacturing are all being reshaped through sustainability. This creates not only a diverse set of investment choices, but also resilience. If one sector lags temporarily, another can pick up the slack. For example, even if EV adoption faces supply chain delays, renewable energy or vertical farming may still experience rapid growth. For long-term investors, this diversification is an advantage that reduces risk while maintaining upside potential. But let's be clear, like every transformative shift, timing matters. The most significant gains are almost always made in the early stages of a trend, before the rest of the world catches on. If you wait until 2030, when green tech has already saturated the market and valuations have skyrocketed, you may still see modest returns, but you'll miss the exponential phase of growth. Right now, in the early to mid-2020s, we're in the sweet spot. Government funding from the Inflation Reduction Act is rolling out. Corporations are setting aggressive sustainability targets, and consumers are making eco-conscious buying decisions. All of these forces converge in 2026, which is why we've called it the tipping point. For investors, that means the time to position yourself is not later, it's now. There's also a personal dimension to all of this. Investing in green tech isn't just about building financial wealth. It's about contributing to a more sustainable and livable future. For many U.S. investors, this is a rare opportunity to align profit with purpose. Imagine being able to look back a decade from now and know that not only did you make smart financial decisions, but you also played a part in supporting technologies that reduced emissions, conserved water, and created a cleaner planet for the next generation. This dual impact, financial and environmental, is what makes the green tech boom so powerful. It's a chance to build generational wealth while also leaving behind a legacy that goes beyond money. Let's recap the key points we've covered. First, the US green tech boom is not speculation. It's happening right now, fueled by government policy, corporate investment, and consumer demand. Second, the obvious sectors like EVs, renewables, and batteries are already showing massive growth, but the hidden opportunities in AI grids, recycling, vertical farming, and carbon capture could deliver even greater returns. Third, 2026 represents the turning point when these industries shift from emerging to mainstream, meaning the window of early investment is closing fast. This boom is different from past trends because it touches every sector of the economy and offers both diversification and resilience for investors. So, what's your move going to be? Will you sit back and watch as others take advantage of this generational wealth opportunity, or will you step forward and position yourself for the future? Remember, those who spotted Tesla early didn't wait for the perfect moment. They acted on conviction, and history rewarded them. The same will be true with the green tech boom. If you start educating yourself, diversifying your portfolio, and taking strategic positions now, you'll thank yourself years down the line. And here's where I leave you with a challenge. Don't just consume this information. Act on it. Start small if you must. Look into green ETFs, research emerging startups, track federal funding projects, and follow companies quietly building the infrastructure of tomorrow. The wealth of the next decade is being written right now, and your choices today will determine whether you're reading about it in the news or experiencing it firsthand in your own portfolio.
One AI
Powered smart grids, traditional power grids in the US were designed for centralized fossil fuel plants, not the decentralized mix of renewables we see today. Smart grids, enhanced by artificial intelligence, are being developed to balance electricity from solar, wind, hydro, and storage systems. Companies like Autogrid Systems, that's California-based, use AI to optimize energy distribution and reduce waste. By 2026, demand for smart grids will explode as states push for higher renewable energy integration. For investors, this sector represents both growth and stability, because utilities can't function without it. 2. Vertical farming and agri-tech. The U.S. population continues to grow, and so does demand for sustainable food production. Vertical farming startups like AeroFarms and Plenty are using AI, LED lighting, and hydroponics to grow food indoors with 90% less water and no pesticides. Cities such as New York, Chicago, and San Francisco are already adopting vertical farms to reduce supply chain issues. By 2026, investors could see this sector scale significantly, especially with government incentives for water and land conservation. 3. Recycling and rare earth recovery. EVs, wind turbines, and solar panels require rare earth elements and metals like lithium, cobalt, and nickel. Companies like 𝗗𝗃𝗃𝗀𝗃, based in the US and Canada, specialize in recycling these materials from old batteries. The US government is funding projects to reduce reliance on foreign rare earth imports. This sector could mirror the oil refining industry in the early 1900s, less glamorous than drilling, but equally profitable. 4. Carbon capture and credits. Startups in Wyoming and Texas are building direct air capture facilities that literally pull carbon dioxide from the atmosphere. Giants like Microsoft and Amazon are already paying millions for carbon credits. As corporations face stricter climate regulations, carbon offsets will become a necessity. This means carbon capture firms could generate revenue streams similar to utility companies, making them long-term plays for investors. 5. Water technology and desalination. Climate change is intensifying droughts across the western U.S. Companies like Energy Recovery Inc. 𝗬𝗏 in California focus on desalination and water recycling tech. By 2026, water scarcity solutions could see explosive growth, turning water tech into one of the hottest green investments. 6. Green data centers. Data centers powering AI, cloud, and streaming use enormous amounts of energy. Firms like Switch and Equinix are pioneering energy-efficient, renewable-powered data centers. With AI adoption accelerating, the demand for sustainable data centers is set to surge. Investors who catch this wave could ride both the AI and green tech revolutions at the same time. 7. Government-backed projects. The Inflation Reduction Act and state-level clean energy programs offer billions in incentives. Public-private partnerships will fund infrastructure, charging stations, and sustainable housing. Savvy investors can track contractors and suppliers benefiting from these federal projects. 8. The investor's advantage in hidden opportunities. Unlike high-profile companies like Tesla, hidden industries often trade at more reasonable valuations. These companies may not dominate headlines, but can deliver steady growth and compound returns. ETFs focusing on infrastructure, recycling, or water could provide diversified exposure. For risk takers, angel investments in early-stage green startups could yield outsized gains if even one scales nationally. 9. Case studies of hidden winners. Enphase Energy started as a niche solar inverter company and grew into a multi-billion-dollar leader. First Solar quietly became one of the largest solar module makers in the US and tripled its stock value in just a few years. These stories prove that the less glamorous players often deliver life-changing returns. 10. Why 2026 is the tipping point. Federal funding timelines align with corporate sustainability deadlines. Consumer adoption of EVs and renewable tech will reach critical mass. Carbon pricing and water scarcity pressures will force industries to adopt green solutions. Investors positioned in these hidden opportunities will see the compounding effect of multiple trends converging.